25 to 50 pips below the box and above the box. Now it makes sense what this is. Here's the 25 marker. Here's the 50 marker. The shadow box highlights the Brinks trade setups. Is it always going to fire in the Brinks trade box? No. But you have to have a deeper understanding of what's going on. Okay, so let's walk through this chart. You have consolidation, right? You have a pin to the low right here. Maybe they picked up some pendings. I don't know what happened here, but here's what goes on. Towards the end of the session, before the start, they shifted the zone away from higher level holders in here. But they stayed in consolidation. Do you see that? Your job is to be smarter than a piece of blue ribbon that paints on a chart. Your job is to reevaluate or reconsolidate the zone and realize they have not made a very aggressive move yet. When you reevaluate the consolidation, you then have your 3 vector pushes with a nice hammer to the low. Notice how they went past the blue tracer into the stop hunt zone. They even spiked through it. But they issued a hammer right here. Just outside. That was bad. Just outside the shadow box. Session beginning. The timings were off by a few bars. Big deal. You know better. They quickly pull back. Go into consolidation to collect positions. Validate the short orders. Okay? Now, notice something crazy. This candle comes all the way back to the low of the day, just enough to pick up anybody that was in here, anybody that got it in here, and that was right. Because of the size of this candle, this would be a pass entry for our group. Because they shifted the zone. If you didn't get your entry in here, when they shift the zone, it's too late. I don't want you chasing it. Why? Think about the size of your stop loss. The appropriate stop loss goes below the low of the day. But Steve, it runs perfect. Of course it did. You could see it in hindsight. Of course it did. But how do you know they're not going to come back for another pass? You don't know that. The stop loss goes where it goes. I can't help it. I'm going to talk about it. Jose doesn't know me. He asked where I got in. Jose, I got in right there, buddy. I know people are saying thought so. I'm kidding, man. I wish I was that good. All right, look. Because of the size of the shift of the zone, that's a note, that's a pass. But if you saw the hammer issue just outside the shadow box in the stop hunt region, you could have taken the trade anywhere in here. Stop loss goes below the low. That is a granny entry. Okay, now, the low should hold for 30 to 90 minutes. Then it's safe to enter. If you have all the other elements in line, they issue a hammer just outside the shadow in the stop hunt zone. It happens to be laying on the 4-hour timeline, which is the blueberry. We'll talk about it. They had their 3 vector candles on a reconsolidation of the zone. Right? You extended the blue box. You know better, man. That's consolidation. There's 3 vectors to the low, vector candles to the low. They ended on a hammer, pulled back. This is an outside bar. I don't care if it has a pin. I don't care where it closes. This bar is an outside. Man, I'm so close to the edge, I keep changing the slide. I'm very sorry. This slide right here, this is an outside bar. How could that be an outside bar? Because it forms the low of the day, and the consolidation is off of it. It's inside. The consolidation is inside the low of the day formation. That's an outside bar. Okay? When market makers trade inside this spike to the low bar, that's a clue for you that the low is forming. Because the spike here forms the low of the day. The consolidation validates that you are at the LOD. The fact that they spiked past the light blue tracer validates you're at the LOD. The fact that they spiked the 4-hour EMA validates you're at the low of the day. The fact that you're in the shadow box and they spiked past the shadow box and came back validates you're at the LOD. Those are the clues to the puzzle you got to put together. We like to wait for the second pass, but you got a lot of opportunity in here. This candle comes back to bust your chops a little bit, may or may not get you. Not a big deal. Don't worry about it. There'll be another setup just like it tomorrow, I promise, and that candle won't be so big. Okay? See it? All right. It's 10. Let's take a 5-minute break. We're going to go into the count, and we will end here tonight after this lesson. The count discusses the levels. All right, so let me get my little 7-minute stopwatch up. Someone asked where I got that from. It's like stopwatch.com or something. It's www.online-stopwatch.com. Okay, everybody back? Good? All right, hear me? All that stuff? All right, some of you are asking about the stuff on the charts. Robert, you're not the only one. Don't worry about that stuff right now. I'm going to break it all down for you. What I want to do is I want to strip away the concepts that you have about the market right now, and I want you to look at the big picture of what these guys are up to. Don't worry about a box, a shadow. I'm going to cover all that shit. It's on there. I know it's in my charts because that's the templates that I took the pictures off of. Just open your mind to what's going on. Okay? And I'm going to tell you what the box is, what the arrows are, what the average. I'm going to tell you all that stuff. Just right now, I want you to grasp the concept, okay? All right, so let's get going. I didn't see any questions other than that I need to address right now. We'll take some questions at the end when I give you your homework. Okay. The count. The third most important element of the system is the levels, or the count, to know where you are in the cycle. Right? You need to walk up to a chart and go, okay, midweek reversal, W's anchored in, second session, W, V, V, M, Wednesday, Thursday, Friday, reverse. That's why you don't need to spend days and hours doing technical analysis. When you become proficient and can identify the midweek reversal or the peak formation anchor points of the cycle, you'll be quickly able to identify the technicals on the market maker side of the market, not on the where the average crossed over, what part of the cycle am I at, is that support and resistance from October 1905, will that hold? Understand? I said this in my presentation on the sales side of the business, that you don't got to spend hours and hours trying to analyze the technicals. You analyze a chart over 3 to 5 days, identify the anchor point, start of the cycle, and you know what to expect on every pair at any given time. Because the market makers have their own cycle and their own way of handling things. You now know how to handle that. Or you're getting there, or I'm getting you there. We'll figure it out, okay? All right. The cycle, as I said earlier, is based on trader psychology. Really, it's based on human psychology. Fear, greed, and inexperience are used to prey upon the traders. The newbies that don't know anything, fear that you're missing the move, greed that you're going to maximize your gain. Those are the emotions that everybody feels in this business. As I drew the pattern for you earlier, there are intraday counts and counts over several days, the weekly cycle. They are all there to trap the traders and grab your hard-earned equity. I've seen people write this a couple of times to me in chat. Oh, Elliott wave, blah, blah, blah. No. Do not associate this with Elliott wave or any other indicator. market makers form zones or levels to trap the traders, book their profits, and hit the stops. Sometimes it's like a joke. You can see it like stairs. It's so easy. Sometimes it's not so easy. Understand that at level 1 and level 3, the aggressive moves are seen. Why? They just made a huge run. They snagged the traders. Some amount of money is stuck. They want to hit the stops in both directions, collect up the contracts, and then trap another fresh batch of traders the other way. The M and Ws form at these levels. Okay? There are 3 levels of correction or rise over 3 days. Could it be 2.5 days? Yes. There are also 3 levels intraday. The 3 bursts. If you know where you are in the cycle, it's easy to pick your directional bias and take your trades. The first level of the correction in this example is driven by the market maker. You will see the fast moves on light volume. You can't tell volume, by the way. You just know by the move. The guys that trade the breakouts with Craig and understand this stuff, think for a minute. Even if you haven't traded with Craig, just think for a minute. Open your mind for a second. Ever seen a candle spike really fast? In a textbook, that is written as momentum. But what's really going on is the market maker is flashing the pair with as little money as humanly possible to get it to move or spike. And other times you've seen the breakout slow and steady, a smooth run. The slow and steady move is the real directional move by the market maker. So the first level correction is created with a flash into a pair. He might do it on a cross, he might do it with the cross, whatever, to save money. I'll talk about that. The second level of the correction is market driven in absence of the market maker. Why? He wants to see where the retail traders will push it. So what happens is this. He creates a stop hunt high spike, pulls back, hits the second leg again, starts the direction, and steps aside. He wants to see what the traders will do going into level 2. Will they buy? Will they sell? How will they set the straddle? How will the contracts or the money be set up? The third level of the correction, when you get to level 3, is again picked up by the market maker. He puts the brakes on, says that's far enough today. He'll trigger the stops again, make the push, validate the ABCD lightning bolt, and create more panic in the market. So understand level 1 and level 3, since they are driven by the market maker, will be more aggressive. Those are the moves that have been scaring you out of good trades because you didn't understand that he was doing it to you. During the levels, market makers will buy from the traders to create their positions, with the heaviest volume being seen at level 3. At level 3, they're all in. They got to reverse and collect their equity back. Understand? When the signal appears, simply buy or sell third level rises and third level corrections against the retail traders. Lights out. If you can count to 3, profit will be realized in these trades. It's a joke oversimplification. Okay? Is there sound issues? No? Okay, cool. Okay, now, this is going to piss you off. It should. In addition to each of the 3 levels, there is a corresponding level of consolidation. Level 1 consolidation. Level 2 consolidation. Most of the time, when this is going on, the stops are triggered in both directions before the next level is started. The zones create 20 to 30 pip swings, be visible on the chart. Market makers are trying to hit the stops both ways to make easy work of the next level. They're trying to take the buying or selling pressure off from the market. So they slap it both ways. That is where, if you guys ever seen those little, they call them pennants. I hate that terminology because I don't like any of that stuff. It's garbage. But look, you have the move, right? They go down, they consolidate. Then what happens is it creates like a little wedge right in there, right? Then they break for the next level. Then they go like this. Forms another wedge. Right? Then they do it again. Now you're going to notice the pins start to the downside. Then they'll reverse. 1, 2, 3. Sorry about your luck. Okay, let me clean the chart back up. Okay, so now write this down and think for a minute. Market maker jumps in, 3:30, 4 o'clock in the morning, 3:30, 3:45 ideal, right? He jumps in. He creates the move, starts to panic. He shows you breakout vector candles the wrong way. He's showing you something, get the retail guys to bite. Retail guys bite the wrong way, he's got them. He pulls back quickly off of the high. He goes at it again one more time to validate, hit the stops. He then shifts away from that, 25 to 50 pips in the first level and goes into consolidation. He then swings both ways. He may come back towards the high of the day. That move, coming out of level 1 consolidation back towards the high or back towards the low, scares you out of a good trade. Scaring you out of a good trade is his job to make sure you don't actually make any money when you're right. Each zone of consolidation creates a little tiny wedge, if you will, on the chart. The pins are issued in both directions, and then the next level drop or rise is seen. He stands aside during that cycle, cycle 2, level 2 forming, sees how the orders are set, and then he says, okay, that's enough, and he reels it back in. He then switches the pins against the move. So if the cycle is down, the pins will start going to the downside at level 3. You'll see the spike candles, more aggressive moves will be seen towards the downside. If price is rising and level 3 is shown, the spikes will turn to the top side. Why? He's trying to trap the traders before he reverses. Okay? Think. All right, let's have a look. Get my little pen. This is classified, by the way. I could show it to you, but then I have to kill you at the end of the seminar. All right, look. 3 hits to the high. Didn't just this exactly just happen. This slide's like 2 years old, man. Remember I told you we pulled the curtain out from behind Oz. It's the same shit every single day, day in and day out. 3 hits to the high, stop hunt at London Open, hammer at 345 and 945. That's all they got. It's the same move over and over. Once you can identify it, you own them. Okay? So now, market maker starts the stop hunt, creates the panic. You reevaluate your consolidation zone. He goes vector to the high on you. He doesn't take out the previous high. Second leg M. Bam. Peak formation is formed. You enter somewhere in here. You got about an hour to decide. Level 1 correction. Pins down. Pins up. I see what you mean about the color. Let me change it. Let me find something pretty like a yellow. Okay. Wow, it erased it. Sorry. I don't know if that's any better. Correction, right? We enter in here. Pins up, pins down, forms kind of a little pullback wedge, right? Level 2 of the correction is smaller and weaker. But again, market makers hit the pins on both sides before the next level is commenced. Now something kind of funny happens. He goes into level 3 correction. He's got vector to the low in here. 3 pushes down to finish out the level, right? Funny how I only see pins on the bottom now. Here, and here, and here. Those candles were all the way down at one time. He's working the low. Now we know we've had on average a 50 pip drop per level. So we're at ADR, 150 pips. At 150 pips ADR, he starts issuing a pin at the bottom of the candle. The pin is a wick on the candle, whoever's asking. He starts issuing pins at the bottom. Do you notice that there's no pins on the top of these candles? Not necessary. I'm trying to trap short holders. So I push the market down, bam, snatch it away, gotcha. I hang around for 45 minutes, push the market down, bam, gotcha. Hang around for an hour, push the market down, bam, gotcha. The third confirmation doesn't happen very often, but I like this chart because there was 3 confirmations here, and then 3 mini confirmations. I can't draw it down there. It'll change the slide. Sorry. And 3 mini confirmations. 1, 2, 3. Do you see how 3 plays into the psychology almost always on these charts? 3 hits to the high, 3 levels of drop, vector 3. 3 pushes to the low, 3 pushes to the high, 3 pins to the low. In the retail world, that gets you to chase the wrong setups. In our world, it gets you to identify his behavior and beat him. Understand that this happens all the time in the market, in every market. You just have to identify it in real time, and the journey starts tonight. Okay, pretty cool stuff. I'm a little excited. I don't know. I really like this stuff. Okay, I can't change the slide. It jammed. There we go. All right, now, here you are again. Variation on the theme. Time. Consolidation. 1, 2, 3 to the high to end the session. Vector. Happen to have a little news in here. Market makers hit the stops in both directions with a spike. That trade's still good. How do I know? The high was not taken out. The high happened to hold. You have your peak formation high. You have your high of the day, U.S. session, and you also have your peak formation high of the week. What do I expect tomorrow? I expect stop hunt, rise, drop. Why? Because I got the cycle now. I nailed it. It's anchored. Okay? Notice something kind of crazy in here too. There's 3 vectors in here on the downside. And then notice something else in here. There's 3 little baby vectors in there. And then they come back in the second leg. Form the W out and reverse. This is not a very good counter, remember? Okay, consolidation. Stop hunt high. This one happens to be, I'm going to write this initials down. You're going to say, what the hell? That's a stop hunt high, hold the mayo. It's not a sandwich. It's a trade. Stop hunt high, hold the mayo is simply market makers came out of the box, out of the consolidation. They used the 200 moving average as the trigger, which offered resistance at the perfect timing at the stop hunt. You know that this trade is a drop. How do you know? Because you already got your high of the week, high of the day, peak formation. Stop hunt high, hold the mayo. The stop hunt trigger bars are held in place by the mayonnaise. This is also 2 pins to the mayonnaise. Okay? You have your drop. This is an example of where you have one level of move, and then you have 2 and 3 the next day. Then what do you have? Just outside the red box, they issue a hammer to trigger the stops of the continued, or the people that got it right long. Second leg, right? They come in, session changeover. They need to hit it one more time to get the stops. That's your entry. Back into consolidation, end the day. They end the day always how they start the day. Okay? Away from the traders that are jammed up down here, they want to stick them. Okay? Okay, good stuff. All right. The peak formation started at the end of the week on Friday in this example. Stop hunt high, sell. They push down. See the low? That blue tracer lets me know that yesterday the price came in like this. When they go back to that, I got it. Second leg, same level, failed to break. Second leg, same level, failed to break. That's a big fat W staring at you. That's good for about, I don't know, 400 or 500 pips, 300 pips. The retracement's 140. That's a 300 pip move. Continuation from Friday. Notice how they caught the retailers with the gap right there. We don't fall for that crap. We don't care. We got peak formation low. PFL. Peak formation low. That looks like an E, sorry. Here, let me see if I can do that. Peak formation low. Sunday going into Monday. There's your gap. Readjust your consolidation for the breakout guys. Readjust your market maker spread. There's your initial HOD. Initial low in here. Readjust because they gapped and shifted away. They gapped and shifted away. They don't want anybody to have a profit. They got them stuck. Now they come back. London Open. W formation. Second leg happens to be railroad track. Straight rise. Do not hold over the weekend. I'm not telling you to hold over the weekend. I'm showing you how to analyze the chart going into Monday. I see peak formation Friday. I know where I'm at. Now coming out, I expect straight away. Why straight away? They have to aggressively get the hell out of here because they jammed all these traders. Right? They got to get the hell out of that range because they want to stop everybody out and get them into margin trouble because they know who's in trouble. They have their list from the plugins. They got $100 million in margin trouble. If I clean that out, I'll put that in my pocket. I'm a market maker. So that's where the aggressive break trade comes. This also, by the way, happens to be the day that breakout traders make money. Second day of the cycle. Okay? In consolidation, what do you expect one more night? Okay, what's the cycle? W, V1, V2, M. That's the cycle, right? Anchor point, peak formation low. Day 2, day 3, reverse. Here you go. Day 1, rise. Consolidate, back into consolidation. Stop hunt low, rise. All of a sudden, man, the pins turn to the top side. Three levels of rise built into there. They come back just outside the U.S. Open. Issue railroad tracks. Retrace 140 pips in case you were bored. They don't have unlimited equity. They must grab it back at some point in the cycle. Now, we'll talk about the continuation, but they can make a W and continue on the uptrend over here. They book a profit, get back into direction. Why? They have longer-term goals that they have to be cognizant of. If you think about this, if they went 3 days up, 3 days down, the market would never go anywhere. It would sit there sideways, right? And surely you'd figure it out. I know Craig would because he almost figured this out. Now, if you notice that trade, 150 pip retracement, 2 pins to the mayonnaise. If they put the second leg in at the mayonnaise, there's your stop hunt low, hold the mayo at the U.S. session in the red box. There's your retracement trade. These things repeat over and over and over again, and you're going to see them in the charts. And once you see them, you can't unsee them. They're in there. Okay? Good stuff. Hang in there. I know you guys are getting tired. A few more minutes, 10:30-ish. I don't want to beat you up too long. Okay. Now, here's the thing that's going to piss you off. This pisses me off. You know your support and resistance bullshit stuff you've been drawing on the chart? It's a hoax. It's a hoax. The consolidation zones created during these moves intraday create false support and resistance level that the market maker puts that's visible on the chart. Understand what I just said. The consolidation zones that he makes on the chart creates false support and resistance because he knows all the retail traders draw the lines on this shit. So right now, here's the pattern, right? Think for a minute. I drew this for you. I showed you this. I push down. I show you this. I push down. I show you this. Right? This crap right here ensures that some retail guy is going to draw a line through it and say that's support from February or August 2nd, 2011, and that should hold sometime in the future. He creates those zones to make you draw the lines. Hey, Joe, nice to see you. I'll get to you. I miss your coffee, buddy. Thanks for the nice email yesterday, by the way, to us and Compass. Okay, now, to sum this up a little bit. Level 1 and Level 3 aggressive moves will be seen. Market makers must book a profit and do so at Level 1 and 3. Level 1 can be previous Level 3. 3 levels of rise, they go into stop hunt, hit stops high, drop. That's your Level 1, your new peak formation. Level 3 becomes the reversal and starts Level 1. I know it's confusing, but think for a minute. If I have a trade that goes down 3 levels, 1, 2, 3, hit the stops one more time and rise, this becomes the new direction, right? Level 3 has now become Level 1, 2, and 3. Understand? If they're going to continue the reversal, or they're going to continue the uptrend after they make the retracement, this becomes the reset and you start the count over. We'll talk about this stuff. I just want to expose you to it. Okay? Let me flick the chart and get rid of my drawing and come back. Okay, so now, something kind of interesting. The head and shoulders pattern develops in Level 3 most often. Think about what the head and shoulders pattern is. Hit the high, pull back. Hit the stops, pull back. Hit the stops one more time. Sorry about your luck. Just kidding. Shoulder, head, shoulder. The difference is between us and everybody else in the retail world, they want you to take that pattern at the neckline. It's over at the neckline. I want you to learn to grab it here or here. Okay? I'm going to talk about it more, don't worry. Here's what I mean. 3 levels of drop going into the next day. Right? Here's the M formation. Nice drop. Consolidation. False support and resistance on the chart. False support and resistance on the chart. This lines up with some crap you'll project down here when you feel good. They come in, spike the low. Asian session. Shoulder. They pull back aggressively. They come in, spike past the low to pick up the pendings, breakout guys, snatch the market away from you, hit the stops of anybody that was correct in this aggregate. Anybody that didn't move to break even, anybody that went to break even gets scratched out on the second pass. Either one of these is an acceptable shoulder, here or here, okay? Railroad tracks going into the session. But isn't the head and shoulder pattern, let me toggle this. Isn't the head and shoulder pattern a variation on a W? Ends on an M? Think. Forget about it. Amputate this guy's shoulder. We don't need it. Get rid of it. There's your spike to the low. Second pass. W formation. Take. You're in right here. Bam. The third try coming back doesn't take out either one of these levels. Trade is still good. Okay? So, this behavior exhibits level 3. Do not enter the trade after the dang neckline's broken. You're missing the whole thing. The move is in here or in here. Okay? Again, there you go. Level 3 behavior. Why? Because what they do is they're showing you a downtrend, right? Averages are separated. The 50's past the 200. Water is below the mayonnaise. The 50 EMA is trading below the jar of mayonnaise, the mayonnaise, white, okay? Now, that's a retail trader's downtrend. What do you do as a retail trader? Buy the rallies, sell the rallies in a downtrend. Sell here, right? But what's really happened is they've made the aggressive move towards level 3, issued a hammer, formed the low, come back, spike to that low, but don't take it out. There's your proper entry on the head and shoulders. And there's your straight run up. Do not go against the market maker setup. Trade in line with him. Okay, you can trade both ways on level 3, but that's more advanced. I'll talk about it later. I want you just to get the basic concepts right now. The bias should be changed from a downtrend after 3 levels of drop. Head and shoulders is seen. But look, just think about what this is. Draw this box right here. Took it out for you to see it. Okay, hold on, let me start over. Draw the box right here, okay? At the session open, they pick up the breakout guys, spike them out long, spike them low short, break plus a close, you enter here short. Gotcha, just kidding. Our group enters here. Okay? And in 3 bars, you're up big. Because this is usually a 50 pip channel. 50 pip Tokyo channel, right? They already, 1 bar is shifted off the low, 50. This next bar is about 50 right here. Then they chop around a little bit, hit it again. 50. There's your ADR. You understand? Okay. Never trade against the peak formation out of level 1 consolidation. That's the day the breakout traders are rewarded. The straightaway develops here most often. Market makers have gotten what they need at the head and shoulders, the aggressive moves, and the traders are jammed going into tomorrow. Trapped. They will not come back to the level, because if they do, it releases all that money back into their accounts of the traders. Understand? By repeating back towards the level, they allow the traders to click out at +1, +5, -2, -3. They're not in the business of letting people out. They're in the business of jamming people. So understanding that keeps you in the right directional bias. WVVM, MAAW. Okay, my throat's starting to hurt. Don't confuse the 3 swipes at the stop loss, the vector 3 candles. Don't confuse the 3 pushes or pulses to the stop loss levels with the 3 levels of rise or correction. Some people are like, I understand. The 3 levels of, or 3 swipes at the stops are like this. They're tight and they're bursts. And I'm going to cover that tomorrow. But then you have the 3 levels of move of approximately 50 pips each, depending on the pair. Australians like 35 pips each. Okay? Whitney, you know this stuff. I don't understand what you're asking me. Okay, now, we're going to end on this next couple of slides. Once you understand how the market is structured, there's only 4 trades that you should be looking for. These trades are 90% accurate and will not fail. I know publicly I can't say that because people think I'm absolutely insane. But I promise you, when you delve into the forum and start looking around at the family, you're going to see Carr, Kim, Granny, Scott, Alan Black, Rick. Their numbers are sick. Dave McCoy now, Zen and Diane. 7 out of 8 for the week, 5 out of 5, 4 out of 5 for the week with a net profit of 10 grand. These numbers are unheard of in this business because people are following the basic retail technicals and they're scared when I say that shit. They think I'm crazy. Well, I'm not crazy. I revealed it today. Okay, so now, mastering the handful of setups that I'm going to teach you in here will ensure your success rate. Tommy just posted he was 87.5% for his first week. Fantastic. These setups are going to ensure your success and produce returns and win rates that are unprecedented in this crazy business. I promise you that. Okay, here's the trades. Stop hunt high M formation, stop hunt low W formation, straightaway rise, straightaway drop. The cycle. That's it. Too simple, right? You need some like dots on there and shit. You need some BBs, MACDs. What the hell? It's too easy. If you take all the crap off your chart that I put on there for you, by the way, and just look at the price action, what they're doing, you're going to start to see the drawings that I've drawn for you. I talk about that stupid picture that was out, I don't know, I think I was in my 20s, it was a long time ago. You know, there was like flying saucers and dinosaurs and there's a bunch of dots. And you stare at it and you can't see shit. You're like, what the hell's that stupid dot painting somebody made? Something happens after you blink looking at it for a few minutes. You blink and all of a sudden the picture opens up and you can see flying saucers, dinosaurs, orange cows, green stars, blue clovers. I don't know what the hell's in those pictures. I never could do that, by the way. That's how I want you to look at a chart now. I want you to look at a chart with a different eye, a different set of beliefs and understandings. And I want you to blink, and all of a sudden you see the M's, the W's, the flying saucer market makers, the dinosaurs eating your stops. Understand? When you look at it with what I'm showing you, and it clicks, it's game over for you in your trading business. You own it. I don't know how long it's going to take you to look inside the 3D art and for it to change. Everyone's different. I still can't see 3D art. I don't want that to happen to you. I want you to be the starfish that I threw back. I want you to be the person that gets this and has success in your life. You all deserve it. Okay, it's 10:43. I'm going to end here. It's a good spot. I'm sorry if you're tired. I went a little longer than I like to go. I usually try to break around 10:30. Homework for tomorrow, my friends. You didn't want to hear it, but here it is. I want you to go back, and I want you to mark the charts. I want you to do Euro USD and GBP USD. And I want you to write on the chart everything I taught you today. You new guys do it. Old guys don't do it because I'm going to be slammed. I will look at all the emails tonight or tomorrow before class. Let me get a little white piece of paper over here. Let's see. Let's see. White screen, white. Okay. Here we go. I need my pen. Euro, USD. GBP, USD. Go back as far as you want. I don't care. Go back a month, go back 2 months, whatever. Okay, now, I want you to label everything that I talked about on the chart. I don't know if I spell that right. All right, let me review for you because you're probably like, what the hell did you talk about? I'm confused. All right, I want you to label. I'm going to make a little list. Vector candles, 3 swipes at the high or low, W's, M's, 3 levels of rise, 3 levels of fall. I want you to label end the day in consolidation. I basically want you to find this on every chart that you can. 1, 2, 3 to the high, pull back, hit it again, 1, 2, 3, W, reverse, end the day. I want you to label this. I want you to note the pins, the timings, the hammers, orange hearts, blue stars. I want you to label everything I talked about for the last 4 hours. Okay? Remember my email address? It's in the beginning of the slide, steve@mmmforex.com. I'm going to go through as many as I can. It's going to be a lot, but I'm going to get through them. I always do, I promise. And I'm going to take 2 or 3 of the outstanding ones, and I'm going to post them tomorrow for our review. We'll talk about it at the opening of the session. Okay? Any questions pertaining to today's information and homework that I can help with right now? Zen and Kim have been answering and typing in there, helping out with the questions. That's fine. Nice to see you, Lou. Can I type my email address? I can't type it because it won't type on the screen, but I can try to write it. Let's see. It's my name, Steve. Wait, let me toggle this and clean it up. Start over. All right, shit, it won't toggle. All right. STEV. See, you should have wrote that down. I told you to take notes. Steve at Forex. Forex. .com. I have another email address coming. I'm just too lazy to set it up on my Outlook. Sorry. Take a snapshot. Use Jing. Use screen capture tool. Lou, don't do it, man. Don't send me any charts, buddy. Okay, look. All the new guys only. Take a screenshot of your chart. Mark it up. Use Paint. Take a screenshot of the chart, use Paint, mark it up. Vector candles, breakouts of the box, stop hunt low. Hey Lauren, how you doing? Stop hunt low, stop hunt high, 3-level drop, reverse pins, mini consolidation zones within the range, within the end of each drop. All the stuff I just talked about. I want to see if you learned anything or you just sat here like a vegetable for 4 hours. 5 hours, sorry. Okay? Kelly, thank you. Lou, thanks. You're a ball buster. 15-minute chart. Yes, Whitney. Everett, thank you. Thank you, Veda. I'm glad you're here. Ed, thanks. Nice to see you, buddy. Thanks, David. Nice swing trading there, buddy. I've seen him in the forum. Great. Thank you, guys. This is good stuff, man. I love teaching it as much as I hope you love learning it. It's awesome. Peter, how you doing? Bruno. Tony T from Florida, hope you're doing okay. Subio, nice to see you, buddy. Quit smoking, man. I'm going to quit Diet Coke. You quit smoking. Joe, nice to see you, buddy. I'm out of chocolate and I'm running low on coffee. Thanks, guys. Thank you, John. Thanks, everybody. All right, listen, I'm going to end it here. Have a great night. I'll rest my voice. I promise I'll be just as jacked up tomorrow. Leah, nice to see you. Alan. I'll see everybody tomorrow. Listen, get some rest. Don't trade live money unless you're a Subio. He's the only one allowed. Seriously, new guys, don't trade live money. If you're up and you want to look at the market, open a chart, take all the shit off of there, and just watch them work. Open your mind and watch them work. Don't put any money on the line because it'll mess up your mentality. Just watch them work. Okay? I know you guys are going to do it. You don't listen. So anyway, good night. Good night, good night, good night. Kim, nice to see you. Thank you. Okay, good night.